Welcome to Trading Lounge and the gold report. We'll also cover silver as well. So with gold here on the US spot gold on the monthly chart here, we're looking at wave 3 here, wave 4 here, and wave 5 up here. We're also looking for 5 waves between wave 4 and 5 here in terms of 1 and 2 here, and going up for wave 3 here. So let's go in and have a look at this. So of course here we're at the old high here, and we're at a large number here of 2000. So it's really going to be a bit of a resting place here. So we can really expect the market to spend time here. And normally we'd be looking for the arrival. And in this case, it has gone a little bit high here, but that's fine. And then the reaction here, which we've got, then we'll be looking for the first high above the level, and then we'll be looking for a corrective pattern here. So this is what I mean by spending a little bit of time here. So it's really important that you don't lose money at levels, because normally what we do is we trade to a level, get out, and then wait for support after the correction here. So we miss out all of this. But because gold's a hot topic at the moment, we've been playing in amongst it. So on this pullback here, we've already moved in long here and looking to take this trend up through here. But this is where it gets really careful. We have to be really careful, because these structures that we're working with here, these are like fourth waves, and fourth waves can get rather complicated. So let's just drill in here a little bit further. This is the pathway up here from wave 1 and 2 and 1 and 2 here, and 5 waves up here for 3 and 4, and then looking for 1 and 2 and 3 and 4 here and 5. So this wave 4 here, we just got to be careful how complex. Look, it may be really simple and we've made a fuss about nothing, but otherwise we always need to be mindful that wave 4s can be complicated. Triangles occur in wave 4s, double zigzags, and out of the 12 corrections, you know, most of them, all of them can occur in this space here, where when we're looking at a wave 2, it's only normally a simple zigzag correction, a 5-3-5 structure. So we just got to be careful here. This is where you lose money. You make it in the trend, you give it back in the correction, and life goes on. So don't overtrade. It's best to trade less money. You know, there will come a time that we can, you know, move in a strong way. So weekly, daily here. So on the daily chart here, this is how I was looking at the wave 4 here. We're still on the trend line, which is nice. An A wave, a B wave, and a C wave here. We can either go that way with it, or we can put wave 4, copy that and put wave 4 here, and also look at this as wave 1 here and back for wave 2. It's possible. We could also look at this as becoming more complicated in this particular structure, like a triangle pattern coming into play here with all of this. So this is what I'm just sort of stressing out at the moment. No, I'm not stressing out, but just stressing the point of this could be wave A here. All of this could be a wave B over here. So an A wave, 3 waves for the wave B, a C wave, a D wave, and an E wave, and then up. This is what can occur. Well, I guess one of the things that we can take on board here is from wave 2 here roughly to the top of wave 3 here roughly, is we'd be looking for 38.2% retracement level. We know gold likes to work in 50%, so but it's already pulled back that far. So that's a really good sign that we're not going to see it move any lower from here. And also too, this is a, you know, this whole number here, I call it, it's a major trading level 2 here for me, in relation to the trading levels concept. But in the old days, they just called this a sticky number. So it's sticking to it, isn't it? It hasn't, it's accepted it rather than rejected it. At this point, because if it had rejected it here, it would have made a new low below here. So it's going up here again. This is what we've got to be careful of. If it gets here and rejects that and makes another low below this one here. Let's go and have a look at the actual structure, because that's something that I can talk about. So last time we spoke, we were looking for an A wave, a B wave, and a C wave, and I was counting this down to here at this level here. So we got the bounce pretty close off that, so I don't need that. And we're also looking to go long as well, so we should be long at this point. Now this is where it gets a little bit, we don't need this one over here now, but I'll just copy that. We can put that here for the time being. I could probably get it closer. I'll just let me do some work on that. Look, to be honest, what we need now is we need to see this market continue to the upside and find support on 2000. That's what we're looking for. And this particular pattern that I've drawn out here, we can just draw this on here. Let's just imagine for a moment that it makes its way up here. It's definitely going to react from here in 3 ways, and I'll just over dramatize that a bit. But basically we're looking for something like this here, right? We want something that it's had the arrival, the reaction, the first high above the level, and then the corrective pattern from that point, like this. If this is the 2000 across here, we want to see the arrival, the reaction, the first high above the level, then coming and checking demand, and then finding support on it again, and that's our entry over here. So this is why you've got to be careful with this, you know. But so we can either have that pattern, or we can have a variation of that where it doesn't come back below the level. It's a little bit rarer, this one, but it occurs a lot. And the third one that comes into play, we don't see that much, is where it doesn't stop at the level and just goes straight through and then comes back in that fashion. Normally the distance above is normally roughly the distance below as a rule of thumb. And what this means when it doesn't do this here, it doesn't stop here, it means that the level here becomes more important. It becomes almost like a triangle pattern coming into this. The price diminishes, supply and demand diminishes into this number and then takes off from that point. So we'll be aware of all 3 of them, but this is normally this is the most common one. So that's what we're looking for there. Let's go in and have a closer look on the hourly chart. So the silver, when we looked at the silver counts better with 5 waves up here, but the gold doesn't present itself as this, as I've mentioned before with all of this. So last time we spoke, we were looking for this to come down through here. Obviously I wasn't around, but we would have put that over here, but you can just take that across. You should have done that. Anybody that knows me should have gone to the first high above the level, so that's where you should be. Let's just clean this up. These are all our sort of target areas and drawings and all that. So this has all come to pass, and we've got that move off that 1900, which is really what we were looking for, and that's all good to go at that point. Just want to, it's not going to do that. Still not going to grab it. I can only have so many objects on the chart. I've got different templates with, you know, oodles of charts on and so on and so on, but it gets to a point where you can only have so many, so I've got to clean up as I go. But yeah, look, all that finished off quite nicely, hasn't it? Just the way that we wanted it to. And that means now we can look at, I'll just copy this for the time being. I won't take it from there in case we get some other complicated situation. I can see that this move up here can finish shortly, so we can look at this as 1 and 2 and probably 3 and 4 in here somewhere, and 5. So we just need to be, I mean, as an A wave, a B wave and a C wave, that's also possible. This is where it starts to get a bit complicated in here. So this can be an A, B, C pattern in here, finishing here. So this is what we've got to be careful of. Let me just check on a few things. From the top here to the low here, we're in that 50-60% retracement level. So that's going to be one resistance place there. and the other one is from this top in here to this low here, brings it down to pretty much where it is at the moment, isn't it? So it's all there. So all of that is resistance space in there. So we need to get through that first. So it does look like we've got 1, 2 in here, and then sort of 3 and 4, or even 3 to here. I need to break that down and have a closer look at that. But I can say that if this is 1 and 2, and this and 3 is either here or here for this, it's kind of run its race a little bit. It's well over 2/3 of the way through so far with this. So this resistance area is really sort of playing out, and this is where the risk comes. So from this long trade we have somewhere in amongst here, we can have that there. Can we get any closer than that? We'll just check. So what we can do is we can take from this low here to this high, even though that may not be the high, it can go further, but it still gives us that 61.8% here. So having it that far away that's the risk that we're up against at the moment, and you would be there somewhere too. Any closer than that can cause problems. We'd probably only get a smaller pullback within that. Let me just check. Do I have a 15-minute chart? I don't know if I do. Let me just... Okay. So what low are we coming from here? Let me just check. From 1910 we want to come to. That's much further down. Oh, here's our other work here. So we can just tidy this up a little bit. I mean, even that looks corrective, doesn't it? But we'll probably play this out as an expanded flat correction as one here, an A and a B and a C here for that. But I'm not interested in that at the moment. I just want to see if I can pin this down a bit better here. It's got one more high here. I have to pull this apart here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. No, that's further back. So that's... I think we're even further up than that. So that would be top of wave 3 here. Wave 4. So we've still got higher to go, which is good. So that might... that will probably take us up here. So that might work out really quite nice actually, because that will give us the arrival here, the reaction, and then the first high above the level here. That's what we're looking for. And then that becomes our signal over here for that. That gets us out of the woods at that point. So that's sort of how I see that. So just to recap that on the bigger picture here. Sorry to work on the hop. I wasn't going to make a video today for this, but yeah. We need to see the market further up. This is where the risk is here. But I've mentioned this before as well. Like normally we would just get to here, get out, wait for the correction, and then get back in over here for that. But I know that everybody wants to trade gold. They should be owning it and not trading it. Just buy as much as you can each week physically. Yeah, well, that's that. Let's have a look at silver. So silver may be a little bit different here, as I mentioned before. So with gold, we'd look at this as the A wave, the B wave, and the C wave over to here. But this here counts okay as 1 and 2 and 3 and 4 and 5 here. There is a bit of an overlap here. That's why I've got this as wave 1 here and also wave 4 here as well. But it's quite high for a wave 4 to be there, you know, like as an A wave, a B wave, and a C wave. It's quite high compared to this low here. And then what we also need to see here as well, we've got the same pattern through here, but we're just going to consider that wave 1 and 2 here. That's 1 and 2 and 3 and 4 and 5. So we need to see, I mean, even if we get 5 waves up, it still doesn't get us out of the woods. So if I go 1 here and 2 here for this one here and this one here, and then we consider this wave 3 here for this, and even if we get wave 4 and wave 5 here, that doesn't get us out of the woods here either, you know, because this can just be all, if I can just borrow this here, copy that, all of that can just be the B wave here. I'm just looking at all the negative things, okay? So all this down here would be the A wave here, the B wave here, and the C wave over here for the wave 4 over here. That's how it can play out. So that's what we're up against here for this. I'm going to push that there, leave that there, and I'll just leave that. But on the good side of it, we just, on the positive side, if this is wave 1 and 2 here, or wave 4 in here, we still need to see more structure here, because even we need to get past this 5 waves here. That's what we need to get past. So we can trade this up till we get 5 waves here, and then we could get out, and then we could get back in on the other side, or we can get back in on a pullback over here for this. This can also be pushed up under here for that, under that wave 2 there. That should be okay there. So this little area here, the 2500 is a medium level. That's a major level. So we've got major levels up the top, then the medium levels, and then the minor level. So this is minor level, or group 2 here. So 65, 72, and 80. And you can really see the market playing out through here. Normally when we get a nice support back on the 72 here, we would also go long. And normally then we just wait for the next one here, which will be, you can look for a small classic trading levels pattern occurring at the 2800 here. If that 2800 here becomes support, well then we'll be looking at our 5 waves up here, which I think we will anyway. So I'll check back in on this later in the week, and we'll check on this here. Alrighty, well, I'll just leave it at that. So just to recap this a little bit, is that for silver here and gold, we need to be tracking 5 waves up. And once that's completed, then we need just to pay attention to see if we get a corrective pullback or an impulsive pullback at that point. Okay, cheers.